Today, I'm speaking with Ami Kassar. Ami wrote a book called The Growth Dilemma, Determining Your Entrepreneurial Type to Find Your Financing Comfort Zone. He's an expert in financing, expert in the SBA loan. We're going to be talking about the different aspect of buying a business, financing your business, and surrounding yourself with the best people to advise you. Enjoy listening to Ami Kassar. Hello, and welcome to a new episode of the Business of Meeting podcast. And today, I am absolutely delighted to be joined by Ami Kassar. If I start explaining what Ami has done in his life, I think I'm going to take all the time of the podcast. But he's been working in corporate. He found his own company, MultiFunding. He's got a weekly column into Inc. magazine. He's got this book, The Growth Dilemma, that we're going to talk about. He's been interviewed in, any business magazine, TV, he's been on. And most importantly, he's an amazing human being. I had the opportunity to meet him again at an event with EO. He's full of knowledge. And for anybody who's got their business questioning about growth and financing, this is the episode you want to be listening to. Ami, thank you so much for taking the time.
Eric, you're too nice to me by the way you introduced me, but thank you.
It's all facts, I'm afraid. And by the way, with my accent, I never know, is it Amy or Ami? How do I have to call you?
Ami.
Ami, very good. Which means friend in French. So that's
correct. Correct.
So first of all, if you can share with us a little bit about your journey, and especially the transition when you said, you know what, I'm going to forget about this corporate work. I'm going to start my own company. So what is your journey? I know you have MBA and all the education, but what did you do in your life and how did you start your business?
You know, people become entrepreneurs different ways. I had worked for a large issuer of credit cards to small businesses in the United States called Advanta, and we completely decimated in the Great Recession. I was the chief innovation officer. I was in charge of all new things, new products, new ideas, new things we were trying. And the Great Recession came, and unfortunately, 1,000 people lost their jobs, a million small businesses lost their credit, and about $1 billion of market cap was decimated. I was number 40 standing, but it was my turn to be let go. I helped 960 people go before that, which was hands down the roughest professional thing I'd ever done in my life. And my turn came on a Friday. I was terminated by the bankruptcy trustees. And on my way home, I went to the bank and I deposited a check for my full home equity line of credit. And then went home and told my wife what I did. And I started MultiFunding on Saturday. True story.
12 hours.
Yeah. Now, I didn't open the doors on Saturday. We started actively working on it, and we were live 6 weeks later. But I was thinking about it for a long time. So it wasn't like this was brand spanking new out of the bat. Like getting terminated wasn't a surprise. Mm-hmm. But one of my philosophies is you can't spend time crying over spilled milk. And I decided to just get going.
That's amazing. Good for you. And now a few years later, you're one of the most searched after person when it comes to growth and financing. And having been in the room listening to you, you're a fabulous speaker. You always have concrete examples. So I can wait for you now to start sharing some of the example. Do you remember the first client you had and what you did to help them?
Sort of. It took 11 months before we closed or 9 months or 10 months before we closed our first loan. I'll tell you a secret. We didn't know what the hell we were doing. And I think it was a summer camp, and we got them a small line of credit or something like that. And it took a long time to learn this business and really get good at it and get robust at it. And there were a lot of evolutionary hiccups along the way, as there always are. But the core principle of why I started the company hasn't changed, which is I wanted to build a service where entrepreneurs could get clear, transparent, honest, no BS information and make good choices for their futures. And the world, many things in life are a confusing mess. Mm-hmm. Financing can be especially a confusing mess. And people can be at very emotional points when they are making these decisions. And our job is to help them sometimes slow down before you speed up and figure out what the best course is.
So when you sit down with your customer, you're not only providing them the service they want, but you're also questioning them about their goals and what they try to achieve to basically play a mirror with them. Is that what you do as well?
A little bit like a money therapist. But if you think about it, how we make financing choices, there's like the left side and the right side of our brain. So there's what the numbers of the spreadsheets tell us, and then there's what our emotions tell us and our prior experiences with money and our feelings and our hopes and our dreams and our aspirations. And it's a little bit of an irrational choice. Prime example is my wife and I are currently thinking about flipping houses, moving into something smaller than what we are. And we look at it completely differently. For her, it's about the perfect, beautiful, wonderful house that fulfills her vision and her dreams and her aspirations and all that. And sure, I want a nice looking house, but to me, if the economics don't make sense, I'm out. So she's thinking about the one side of the brain. I'm thinking with the other side of the brain, and maybe we should give up. We'll get divorced. I'm just kidding. But we all have these conflicting emotions when we're thinking through how much risk we want to take, how big we want our businesses to get, how fast we want to grow, what we're willing to put on the line in exchange for growth. And then you can easily screw up in that process. Mm-hmm. So you got to just take a breath. Most times when people call us and they're looking for something specific that they think they need, usually what they need is different to what they think they need.
Correct. I remember years ago, I was on the bridge between Zimbabwe and Zambia, mm-hmm. and I did the bungee jump. Mm-hmm. And I remember friends telling me, don't rationalize, don't think about it when they say go. If not, you're never going to do it. And so ready, okay, go. And I jump with my arms open, and then I start screaming, which is, I guess, similar to what all of us entrepreneurs have experienced at some stage in our business. Now we're going out of the pandemic, and there's a lot of opportunities, obviously, but there's also a lot of us questioning whether we should start our own business or restart or relaunch. So how do you find the balance between what you said with, being very rational and analyzing all the risk, and basically jumping and just going with your guts?
I don't think there's one right answer. Everybody's going to be different, but it's really good to get good at listen to different perspectives about it and get different opinions about it, and then settle with what you decide to do. I always say to people, the most important thing is a good night's sleep. But sometimes we make irrational decisions that, I'll give you an example. This is 10 years ago or so. Someone came to me and they needed money. They had a cleaning company in San Jose, California. And I got them an SBA loan offer. It's 10-year money at 6% interest. And it involved a lien on his house. And he said to me, hell or high water, no lien on my house. It was a non-negotiable issue for him. Now, I don't know what had triggered that, but there was clearly something that had happened to him or his wife or his family or a neighbor or something, a bad experience with putting up a house for a business, and he just wasn't going to do it. And I said, okay. He said, go find me something else. It's a very tough financing market. And then the other option that we could find was 1-year money at 36% interest.
Don't tell me.
He took it. Okay. So there is a case that despite what the spreadsheets told him, his emotions or his prior experiences with money were carrying the day. Unfortunately, he landed up going bankrupt a couple of years later and lost his house.
Oh my goodness.
Okay. But that's why you need to try to sort out and understand what you need. And that's why a forum is terrific, or being a part of EO or a different group where you get the benefit of different opinions and with other people who have been through stuff like this before. And so if we see people making what we perceive to be a big mistake, we can warn them of the risks, but ultimately they're going to do what they're going to do.
Yeah. And that's absolutely true for any entrepreneurs. And I remember having one of the first things that I did when I started my business was having my own personal board of advisors. I was not a member of EO yet, but I gathered some friends, different background that I was able to ask questions to. Now, in the book, The Growth Dilemma, I love the subtitle, the tagline that says, determining your entrepreneurial type to find your financing comfort zone. What are the different type, and what is the scope of the less risky to the most risky profile that you've seen in your career?
So there are people out there who personal assets and business assets are non-negotiably separate, and they're petrified of risk, and they're perfectly okay with growing very, very slowly in lieu of taking any risk. That's one extreme.
Right.
Then we meet entrepreneurs who would sell their firstborn for their company if they could make it grow faster. Almost literally. And then there's everything in the middle. And so I do think it's important to understand what your risk profile is, and if it's a limiting factor in the decisions you make about your company. And I also think it's particularly important if people go into business partnerships that they take the time, and there's a part of the book where you can get a risk profile score, but they take the time to understand what people's risks are. So we all know, especially after this year, that building companies is never a straight line. And sometimes shit happens. And the company needs money. Well, let's say the company needs $200,000. I'm making up the number. And there's two 50-50 partners, and the company's capable of getting the loan, but the loan requires each of the partners being willing to personally guarantee it, which means if the company goes down, they're on the hook to pay that personally. And one partner is ready to go, and the other partner says no. These things happen all the time. So especially with partners, I mean, it's important if you're on your own, but especially with partners, it's critical to know agree upon your goals and have a clear understanding of what risks you're each comfortable to take.
Absolutely.
To reach those goals. And a lot of times people don't do that. And then the lawyers will end up having a fun time separating it all and making lots of money.
That's a very, very good point. And I've thought already with other guests about the importance of, getting to know if you go in a partnership, getting to know the other. But the risk profile in terms of financing, I think that's a crucial and extremely valid point.
We all know that barring a miracle, there are going to be shitstorms along the way.
Mm-hmm.
And what are you going to do? How much are you? And it's the same question for yourself. How much would you be willing to do to save your company?
Yep, absolutely. Now, I've always been, until a few years ago, in the mindset of, and please don't laugh, I'm proud I don't have $1 of debt. I have zero debt and everything is wonderful. And I'm very proud of it. Until I realized that this is not necessarily the most effective way to run and grow my business. So can you speak a little bit about why should people think about financing and how can they get this financing?
Well, first of all, the most effective way to run your business is however you're going to sleep at night. So people can build great businesses without debt. It'll probably go a little bit more slowly.
Mm-hmm.
But if they're the type of personality where the debt is going to give them so much anxiety, then just do it that way. It's okay. The room doesn't have to be built in a day. You can slow down.
That's a great point.
But I do think you should understand what your limiting factor is and what the possibilities are that if you had more capital to work with, what you would do differently. So I always encourage people, and I'm working on all this as potentially part of, hopefully be my third book. But well, I'll ask you the exercise. If you ask people, I often people, how much money are you planning on investing in your business the next 12 months? And what? It's pretty hard for people to answer that question because they don't know off the cuff. It's even more difficult and even scarier in a way to look in the rear view mirror and say, okay, well, what did you invest in your business in the last year? And what results did that get for you? So it's interesting if you think about what you spent in the last year, a percentage of it is just for stuff that you need to do to operate the business, payroll, rent, like, utilities, telephones, like there's just stuff that's part of your everyday operation of the business. And then there's stuff that's you're testing, you're experimenting, you're trying new things, you're investing in the future. So I would challenge everyone to take the time to say, for every $1,000 I spent this year, this is how much I speculated with, and this is how much I needed with. And whatever the number is, say you speculated with $200,000 last year, or $100,000, $50,000. If you hadn't speculated, you could have that money in your bank account right now. So if you put $250,000 in the stock market, you'd be tracking it. But we often do a terrible job at tracking what we're investing in and deciding when to cut our losses or when to double down or triple down or things like that. Anyway, whatever you decide to do with all that, another big question is, are you investing fast enough?
How do you know that?
Well, you've got to test it. You've got to test your assumptions. Let's say your plan is to do $100,000 of investing in the next 12 months. It could be $1 million, it could be $10 million. It doesn't matter. Everyone's business is a different size, but let's just call it $100,000. And you've got a system you need to have a system to track, like where that money is going to go and how it's going to do for you. And you shouldn't invest it without a goal, right? Mm-hmm. I'm going to invest this $100,000 and I think it's going to generate $1 million for me over a few years. So you should have a plan of what your investing is this year, and based on that investing, what you think your business will look like in 3 years. And that's plan A. And that's just in the normal course of business of what you're going about today. Then whatever that number is, I would say triple it. Don't worry for a minute about how you're going to pay for it, but triple it. Based on tripling it, now where do you think your business is going to get in 3 years? Cut that list in half, prioritize it, and do it again. Now you've got 3 scenarios. each of them, you also have to figure out how you would pay for each of those things. And if you use debt or equity, what it would cost you. And then pick your path and stick to it.
And when you say stick to it, how long do you need to stick to it? And especially if things are not delivering the numbers you expect.
No, you could change to it. You can change how you allocate it, but generally stick to your capital allocation. Mm-hmm. If you've decided you're going to invest $250,000 this year, invest it. Set up your balance sheet to do it and invest it. You might reallocate your portfolio of investments along the way, but invest it. If it's 750, invest it. If it's 500, invest it. But don't get stuck in, I call, in la la land just because you can't decide. I know two people right now. One's life is very comfortable. He's making a good amount of money. He knows he probably should invest in his business, but he's not sure he wants to take the risk because life's kind of good. I know about somebody who needs to invest in his business and he's scared of the risk of the financing, but he's not necessarily thinking about the risk of not doing anything. Mm-hmm. So there are these constant trade-offs that
absolutely. And then again, you're back to the profile and the character of each individual.
Yeah, there's not a right answer. So I always say to people, I'm not here to shove debt down your throat.
Yeah.
I am here to challenge your thinking about how quickly you want to grow and how fast you want to do it.
Which is brilliant. And it's really again the balance between, on one hand, the analysis paralysis, and on the other hand, just taking risk without even thinking about the plan and why you're doing this and what you try to achieve and how you're going to be successful.
You don't borrow money without a plan. Your plan might not work out, but don't borrow money without a thesis about how you're going to make more money.
Absolutely. Now, this year I've been speaking with several people that bought a business, and there's a lot of baby boomers that are going to retire, that are retiring in this country in the next 10 years. What are the options for somebody, and obviously starting with the meetings and event industry, but in general, business owner, what are the options for somebody who wants to buy a business and that not necessarily have 100% of the fund to buy that business?
Yeah, if you're going to buy a business, I always encourage people to seriously think about the SBA. And amongst many things, the primary benefit of SBA lending, in my opinion, is they give you 10 years to pay it back. So if you're buying a business at 3x or 5x EBITDA, you're going to have some wiggle room and some cash flow to help cover, make those payments and cover your payments. Mm-hmm. So the SBA is perhaps the biggest, darkest secret in government. And it's something I strongly encourage people to think about.
And so the SBA, so the Small Business Administration, correct me if I'm wrong, they are lending up to 80% or 90%?
You can go up to 90%, up to $5 million. But you don't go to the SBA for the loan, you go to a bank or to go to a company like ours who can help you through the process.
And so that means that if a company is it's basically somebody selling their company for $1 million, by having 100,000, you might get the financing for the rest.
Yeah, you could potentially get $900,000 for that.
And what are the rules? And I know there's something changing the 30th of September.
So there are some benefits between now and the end of September to encourage lending, where the government will pay your first 3 payments up to $9,000 a month. And the government is waiving all the guarantee fees, which saves you 2 to 2.5 points on the face value of the loan, which is a lot of money. And the government has increased the guarantees they offer banks to encourage them to do this stuff. So there are a lot of good benefits. But if you want to take advantage of them, time is of the essence, because especially on an acquisition, typically takes at least 60 days to get it done.
Absolutely. And do you know of any plans after the 30th of September to maintain those advantages or have different advantages?
There's no word on the street about that right now. Doesn't mean it's Washington, D.C. I gave up on guessing about what they're going to do there a long time ago.
I think you were advising in the White House at some stage, right?
I have, but I'm over it.
So basically, opportunities for those who would like to buy a business. And then what about people that are investing in infrastructure, or there's a lot of companies.
You can use an SBA for working capital, growth capital, buy a building, buy a business, buy out a partner. You can use an SBA loan for all kinds of things. It's not just acquiring a business. But it's still a loan. You have to pay it back. It comes with great value, and you need to get the right counsel to go through the process because it takes time.
Yeah, absolutely. So there's an incentive to do it before 30th September, and they're still available afterwards.
No, I mean, SBA loans will be available after September 30th, but without the benefits. But if you want to take advantage of the September 30th benefits, don't wait. I don't know exactly when this is going to play, but pick up the phone and start the process, because you don't close these things in 24 hours.
No, absolutely. Absolutely. Now, Ami, for those who are watching on YouTube, you are seated, and your Zoom background is you're seated in this fighter jet. So what's the story of that?
It was before COVID. I probably taught 40 or 50,000 people about SBA programs and stuff like that. And I felt a great responsibility that was my small way of helping the country through the crisis. And so I just felt like I was up here helping entrepreneurs navigate this battle. And so that's the story behind it.
That's very nice. So we're now 6 months into 2021. How do you see the economy? How do you see people in terms of investment and buying businesses? Because obviously you are in a very privileged place for that. What's your take on the future in the economy and the business for small business owners in the next 6 months or the next 2 years?
I just think the needle keeps moving, right? Businesses are going to be here in the next 6 months, 2 years, 5 years, 10 years. And you've just got to, and running and building a business is like a marathon. And there's going to be different hiccups and pivots and stuff along the way. The challenges today are different than they were 6 months ago, and they'll be different in 6 months. And the challenges aren't universal. The challenges are different for businesses. There are some universal roles, I think. Surround yourself with peers and advisors. Do something you love. If you don't love it, don't do it. It's too difficult. And build a strong culture and team around you, and you'll manage to ride the ups and the downs and the highs and the lows.
Absolutely. Great points. The last question for today. Do you see any increase in the loan that people are asking, the financing that people are asking, or has been quite steady the last months?
We're just financing different things. We're financing a lot of acquisitions now, partner buyouts. We're financing less working capital right now. That'll change. People still have a lot of their PPP money. People are waiting for a lot of their idle money. So just people are in different positions in different situations.
And at the end of the day, we are in the greatest country in the world to be an entrepreneur, right?
Greatest country in the world. We're healthy. Be blessed. Do your thing.
Absolutely. Ami, thank you very much for taking the time. And I look forward to seeing you live very soon.
Love it. Thank you very much.
Thank you, Ami, for your time and for your insights. I strongly encourage people to get in touch with you and read your books. Very interesting and also very enlightening to hear from you that a lot of the people now are looking financing to buy a business or buy other partners. Very interesting. If you want to connect with me, please go on LinkedIn or join me in the Facebook group, www.eventbusinessformula.com/group, where we discuss everything related to owning your business in the meetings and event industry. Thank you.